Coming back, we will now resume our afternoon session. And today we mark the launch of the 5 most active organizations supporting secured transactions reform from all over the world, of a joint network to coordinate their activities. And this was the result of efforts that started at a conference held in Philadelphia, which crossed the Atlantic, and with a conference in Madrid, Spain, followed by the third in Cartagena, Colombia, and most recently at a conference held in Vienna, albeit virtually. And now we are here in Seoul, Korea, to witness the launch of the Joint Committee, which seeks to facilitate the modernization and enhancement of secured transactions frameworks, particularly through the adoption and implementation of international standards. With that, I would like to pass the floor to the representatives of the 5 organizations on the Executive Committee to make brief congratulatory remarks. First will be Ms. Caroline Nicholas, who will be speaking on behalf of UNCITRAL, the chair of this year's Executive Committee. So Ms. Carolyn Nicholas, a senior legal officer, head of technical assistance section at UNCITRAL, will open the launch ceremony. She could not join us live for her personal reasons, so let us watch the video for her opening remarks.
Good morning, good afternoon, and good evening, dear participants and dear colleagues from our partner organizations. It is my great pleasure to join the launch ceremony of the Joint Network for Coordinating and Supporting Secured Transactions Reforms, which we'll call the Joint Network to make it easy, which was established to coordinate the activities of participating organizations in providing technical assistance and capacity building to states and organizations in secured transactions and related reforms. The modernization of secured transactions regimes has been widely recognized as facilitating access to credit and to contributing to creating markets that enable economic growth and development. Realizing those objectives entails various players engaging in multiple processes, from developing an efficient international model, adapting it to local needs, ensuring its coherence with related legislation, to successful application in practice. And the intricacies of these processes are such that coordination is absolutely critical. Indeed, the need to coordinate processes in international commercial law reform has been recognized for decades. In 1966, the United Nations General Assembly adopted a resolution that highlighted a lack of coordination and the need for a process to harmonize and unify the law of international trade. The resolution that it passed, which established UNCITRAL, also clarified that the goals of UNCITRAL would include substantially coordinating systems and accelerating harmonization worldwide, and also ensuring that its activities are fully inclusive and specifically provide a voice to developing countries. Here in UNCITRAL, we're currently coordinating with the World Bank Group on the Insolvency and Creditor Rights Standard, and we're cooperating with the International Institute of Unification of Private Law, better known as Unidra, in the area of factoring and in digital assets. The idea of establishing a joint network came after the organization of 4 coordination conferences on secured transactions reform, together with the World Bank, Unidroit, Kozolchyk National Law Center, and other partners. The joint network seeks to facilitate the modernization and enhancement of secured transactions frameworks, particularly through the adoption and implementation of international standards in this area. Its membership is open to intergovernmental organizations, financial institutions, think tanks, universities, development partners, businesses and industry associations, i.e. to all with an important stakeholder interest in this area. Here in UNCITRAL, we're very excited about the launch of this joint network. We welcome other partners to join and look forward to providing more effective technical assistance and capacity building programs on secured transactions reform through these coordinated activities. With that, I'd like to wish you a very successful conference. Thank you very much for your attention.
Thank you very much, Ms. Caroline Nicholas. And next, we'll have speakers from the organizations. Once again, I would like to mention for you to please limit your speeches to 3 minutes so that we have more time for the discussions. Next will be Ms. Elaine McEachern, the Senior Financial Sector Specialist at the World Bank Group, FIG Advisory, the International Financial Corporation. So please give a warm welcome to Ms. Elaine McEachern.
Hi, good afternoon, everyone, and greetings from Canada, where it's very early in the morning today, but I'm most happy to be with all of you virtually. And on behalf of the World Bank Group and the IFC Financial Institutions Group in particular, I'm delighted to participate in this event that's being held in complementing the 2021 International Conference on the Ease of Doing Business in Korea. So very grateful for the opportunity. I would especially like to acknowledge and thank our co-hosts, the Ministry of Justice, the Republic of Korea, particularly Deputy Director Ho-Sun Kim, for including in today's program an opportunity to officially launch the joint network for the coordination and supporting secure transactions reform. So the joint network, as it was earlier referred to. Together with our partners, UNCITRAL, the International Institute for the Unification of Private Law, Unidroit, the Kozolchyk National Law Center, and the Organization of American States, we're very grateful for the opportunity to collaborate and work together going forward in this particular important area of secure transactions. We see the role that we play as development partners in the international forums and the working groups, like those noted above, and in particular, in addition to INSOL and the G20 SME Working Group and others as critical elements to ensuring policy formulation, promotion, and implementation of secured lending international instruments and standards as being critical tools in the development of the financial markets and improving access to finance for the MSME sector in developing economies in which we work. We believe the need to both collaborate and coordinate our respective technical efforts in the area of secured transactions law reform is more important than ever during what will be a very interesting post-COVID recovery period. We look forward to this more robust cross-collaboration in strengthening the knowledge exchange among our respective institutions for the benefit of our member countries by collectively sharing our experiences and expertise in the secured lending field through the creation of supportive legal and institutional enabling policy interventions, sharing of best practices and lessons learned through their implementation. So with that, I would really like to send again my gratitude and being thankful for the opportunity to speak on this, and very much looking forward to the next working group meeting that we'll have. Thank you and good day to all of you.
Well, thank you for joining us during the early hours of the morning. Thank you very much. And now our next remark will be Ms. Anna Veneziano of Unidra, the chair of next year's executive committee. Please welcome Ms. Veneziano with a warm round of virtual applause.
Thank you very much, and warm greetings from Rome, where it is early but reasonably so. And I would first of all thank you, the distinguished organizers and the co-hosts from the Korean Ministry of Justice, in particular, Deputy Director, and to all the participants. I'm delighted to represent here Unidra in the launch ceremony of the joint network, together with the colleagues and friends, representatives of the co-sponsoring organizations. And as you know, Unidra has been a supporter from the start of this initiative, when the first coordination conference was organized with the participation of the World Bank, NatLaw, and the International Insolvency Institutes and other organizations. And it is also true that at the core of our activities, secure transactions is one of the most important areas, one of the most successful instruments, the Cape Town Convention and its protocols, the newly born but already very much alive mining, agricultural and construction protocol, as well as several items in the new work program that were also mentioned by Caroline and will be discussed in the next panel by my colleague Hamza Hamid. what I would like to say to conclude this opening remarks is that we have seen with great satisfaction an increase in the cooperation with our sister organizations, and in particular UNCITRAL, even a first joint project on warehouse receipts. But we have also seen an increase in the participation of regional organizations represented here, as well as the World Bank Group, international financial bodies, governments, industry, academics, practitioners. Now, the latter is a typical trait of Unidra's project, but I think that the coordination conference have really enhanced this cooperation and participation. So we see this network as a powerful and necessary tool to achieve common goals and to approach the new challenges. And I'm particularly delighted to announce something that most of you already know, that the next coordination conference will be hosted by Unidra in Rome next year. And we really hope to see you there in person. So what is left to me to say is just that we can enjoy a wonderful conference today, and to thank again the organizers and the Korean Ministry of Justice. Thank you very much.
Thank you very much, and thank you for keeping perfect timing as well. Next, we'll have Ms. Jeanette Trammell, Senior Legal Officer of the Department of International Law for the Secretariat of Legal Affairs from the Organization of American States. So Ms. Trammell, you have the floor.
Good morning from Washington, D.C. Good afternoon, good evening to all of you. Very warm welcome to you this morning, and thank you very much to our host, the Ministry of Justice from the Republic of Korea. Greetings to all participants and to our sister organizations. On behalf of the Department of International Law of the Secretariat for Legal Affairs of the Organization of American States, I'm delighted to attend the launch of this joint network for coordination and supporting secured transactions reforms at this international conference on ease of doing business, which is hosted by the Republic of Korea. The OAS Legal Secretariat has participated since the beginning of this initiative in 2017. And we are delighted to see its formulation. This work is very much in keeping with our mandate from OAS member states, namely to promote private international law and to do so in collaboration with other international and regional organizations involved in this work. And secured transactions reforms is one of the topics specifically identified because of its importance to equitable access to credit and economic development. As already has been mentioned, the initiative of this joint network arose out of the recognition that multiple reform efforts are frequently contemporaneous and sometimes duplicated, and that these efforts could be better orchestrated to maximize resources and achieve greater harmonization at both regional and international levels. There is a proverb, of uncertain origin that seems very fitting on this occasion. It goes as follows: if you want to go fast, go alone. If you want to go far, go together. So we at the OAS look forward to the journey ahead together with our colleagues at UNCITRAL, Unidroit, the World Bank, and the Kozolchyk National Law Center, and others that will join, we hope, in this initiative to encourage secured transactions reforms and improved access to credit in the Americas and around the world. I wish you much success in this conference, and thank you so much for the opportunity to speak to you this morning and this evening. Thank you.
Thank you very much, and thank you for logging in at the odd hours once again. And now our next remark will be Mr. Mark Dubovich, Executive Director at the Kozolchyk National Law Center. So please give him a warm welcome.
Thank you very much. It is my pleasure to be here with you all, and my gratitude to the organizers and particularly the Ministry of Justice. I have really not much add to what has been said by my friends and colleagues who spoke before me, other than also to acknowledge another institution who is not with us today, the International Insolvency Institute that was one of the founding fathers of this initiative with the organizations that are with us today. The network focuses primarily on coordination of formulating, promoting, and adopting international instruments. And we have heard from the previous speakers about a number of these instruments that are being coordinated, particularly factoring, warehouse receipts, and several others. What becomes more urgent and more important as these instruments are finalized is the coordination with respect to their implementation, as Korea and other states are now faced with challenges and questions. Which of these instruments do we implement, and how do we implement these instruments? So one of the core functions of this initiative would be to provide advice as to which and how these instruments should be implemented on the ground, and we very much look forward to many years of work and assistance. So that's all I had for now. Thank you.
Thank you very much. And thank you very much to all of our speakers for keeping perfect timing. And now we're going to proceed with our last session on secured transactions and related reform, improving the getting credit environment in the Republic of Korea. And with that, I'd like to introduce our moderator, Dr. Tae-Sung Lee, the legal officer at the United Nations Commission on International Trade Law, will do us the honors. With that, Dr. Lee, you have the floor.
Thank you. Thank you for that introductions. And before we start, as one of the members of the joint network, I would also like to thank the Ministry of Justice for allowing us this platform to use this platform as the launch ceremony of the joint network. We wanted to get it off the ground this year, and we were able to do so thanks to the Ministry of Justice. So I would like to thank them for that. We wanted to also use this platform because the topic of today's conference more broadly is about ease of doing business and about the doing business environment. And we wanted to see how the 5 organizations can actually assist and help Korea improve its doing business environment. Now, in the area of getting credit, Korea ranks quite low. It ranks in the 67th in getting credit, scoring 5 out of 20 in the Legal Rights Index. And it is one of the lowest ranking in the different sectors that Korea has ranked, because Korea is ranked overall in the 5th or so. So this year we're conducting a study on how to improve the getting credit environment. And as such activities fit well within the realm of the joint network, we wanted to actually hear from the different organizations on how and what measures Korea could take in order to improve its doing business environment. So with that, I would like to first give the floor to Elaine to give us a little bit of a policy approach about who the stakeholders are in order to improve the getting credit environment, how to engage with the business sectors, what is the role of the government, and also, as you may have heard, because doing business report is taking a break, I was also wanted to hear from Elaine on her insights on what will happen to the doing business report. Elaine, you have the floor.
Thank you, Jay. Thank you. So again, good afternoon, everyone, and good morning to some of us that are online. So just picking up on some of the points that Jay had mentioned in his opening questions in terms of what does the World Bank Group, and in particular our Global Practice Group, may be able to have as insights and some advice and guidance to offer the Korean government. I think I'll focus maybe on three key areas, and that would be stakeholder engagement, the need to really do thorough consultation with stakeholders and getting them involved early, the importance of engaging with banks and how you can go about doing that and the role that they play. And again, and my last point would be just focusing a little bit on the importance of that the collaboration that's needed both between the public sector and the private sector. So I've just have some notes here in front of me just to sort of guide the discussion for the next sort of 10 minutes or so, 8 to 10 minutes. And really just to sort of share with all of you some of the experiences that we, as the global practice team who've been implementing these reforms for about more than 15 years across the developing world. So we've learned many lessons, and some of them have been very valuable, and both have been good and bad. And so, as they say, sometimes the best lessons are learned when you've actually failed at some things and you have to try and do it over again. So what I would like to do is just maybe share a few of those so that you don't have to have those experiences as you move through your reform. So as Jay has mentioned, and I had logged into the early morning kickoff session of today's meeting, Korea is ranked 5 out of 12 on that Doing Business Legal Rights Index. I think there's a couple of things to note about that. I mean, obviously, that means there is room for improvement. But the great thing is there's many jurisdictions who have gone before you, as well as the guide to the model law and secure transactions reform that was produced by UNCITRAL and other members that were part of that working group that are on the call today, in fact. So there's lots of material available to help with the drafting and the policy directions that may be taken. But part of that success really will be anchored in how effective you are in engaging the stakeholders throughout the process. And by that, what I really mean is that you need to start very early on in the early stages of the project. And we've learned that key stakeholder groups within both the public sector and the private sector are critical in terms of them buying in to the overall reforms at the earliest point possible. And trying to bring them on later actually is very, very difficult, and it really will undermine some of the early adoption to the new legal environment that you're trying to put forward. So, for example, it's vitally necessary to have key public sector institutions and the respective decision makers and those people within those institutions who have a mandate or who may even influence the direction of the discussions around the development of financial sector policy interventions. So those key institutions would be central banks and the regulators of the financial market, the ministries of finance. It could be the Ministry of Justice, in particular the AG, what would normally be called the AG's office, the Attorney General's office. And in some cases, any of the ministries that have a mandate to foster the development of the MSME sector in particular. So in some cases, that's the Ministry of Commerce, Industry and Trade. So if the government bodies are not bought into the importance and the value and the benefits that will come from the reforms, it becomes very difficult to move new legislation through the bureaucracy and up through the parliamentary process. On the other hand, it's as important to have brought in board the private sector entities, right? So the Bankers Association, the Legal Fraternity, Industry and Businesses Associations, it could be the Leasing Association. So all those who would be using the new legal framework to facilitate, commercial activity. And there are key players in both the public sector and in the private sector, and bringing them together is really, really important in terms of getting them to collaborate and feel like they are part of the decision and they are part of the direction that the policy overall is going to go, because at the end of the day, particularly the private sector are going to be the ultimate beneficiaries of that reform. So I think it's important to keep that in mind. And in terms of, who really influences the development of that, often what we've found is, in our experience, if, for example, you're setting up a working committee or a steering committee, and that steering committee doesn't represent or reflect the interests of the private sector on that steering committee, it becomes more difficult for the private sector to buy into the reform and adopt the reform going forward. So oftentimes, you know, we've encountered where government feels like they understand what's going on the business side of things. They know how to do transactions and commercial and how to structure deals. And in fact, that is a little bit short-sighted. And you need to have that insight from the financial institutions sitting around the table with the legislative drafters, helping them to really understand that this is the commercial activity and the realities on the ground. And so the drafters and those holding the pen really need to have a solid understanding of the benefits of the reform, both the economic benefits, but also the social benefits, and understand the nature, the culture, and the clientele of the financial sector market players. And that's not just the commercial banks, but it's also non-bank financial institutions and other new financial market players like fintechs, for example, that may be coming in. Because it's important to really understand the commercial transactional perspective that the financial institutions are working with on a day-to-day basis, right? And they are impacted by and guided by the prudential regulation. So it may be fine for the policy and for the legal framework to say, I'm going to facilitate this type of transaction, whether it's, you know, tangible or intangible assets. But if the prudential regulation isn't supportive and complementing that new piece of legislation, you may have a conflict. And then that ultimately means the uptake of that law is going to be limited because the financial institutions can't be offside their regulator. And so therefore there's a need for and a recognition of having, one, the central bank at the table when the drafting is going on, but two, the financial sector also being there to express, you know, the realities of what's going on the ground from a transactional point of view. And also, you know, for those holding the pen, you have to really have a strong understanding of the different types of borrowers and their needs, and striking that balance within the policy framework of allowing for market innovations to happen, but offering the correct balance of the legal protections for both creditors and borrowers, while not distorting the market from a financial stability point of view. So the need of having that stakeholder engagement and those different representatives and voices around the table is critically important in our view. And we think that in the cases where that hasn't happened, it's taken a lot longer for the reform to have the immediate impact on the ground, and it has been less successful going forward. Another area that I think is worth noting is if it is being a government, sort of what we would call a government-driven reform, and again, this is related to stakeholder engagement. So a lesson we've learned over the past sort of 15 years or so, again, is implementing these types of reforms cannot be done in a vacuum, right? There should be consensus on the need for the reform from the various key actors, especially the private sector. If the financial institutions and other market players do not see the value in the reform, or they don't understand what the reform is all about, it is difficult to get private sector to adopt the new legal environment once it's passed in Parliament. So you must remember that you're asking financial institutions to change their internal risk management practices, their policies, and their procedures in most cases. And this will come at a cost for them. And they have to retrain their people, change their internal processes and procedures, and the surrounding paperwork that supports that commercial activity within their financial institution. So if you're not consulting with them early on and reflecting on those insights that they bring to the table in terms of how they conduct their business, the reform again will take much longer to get adopted by them, because they need to recalibrate their business practices, and that takes time. So the earlier they're involved in the process, then the much better the take-up will be. If they're not involved, the reform will actually lag in its uptake, and we've had that experience time and time again. And I think my third point would just be, my third and final point would just be, there's a lot of emphasis when you start to do these reforms on making sure that the commercial bank is brought on board, but it's equally as important to make sure that the non-bank financial institutions, our interests are balanced in the legal framework as well. So it's finding the balance between the commercial banks and the non-bank financial institutions and other financial market players, particularly the new market players that are coming into the and utilizing the new framework. So I would say, you know, engaging with banks is important, but equally as important is making sure that you strike a balance between reflecting the interests of all of the market players that are going to be utilizing the new legal framework. The idea is that you would create a level playing field for all types of creditors and not weight favorably in one interest group over the other. And we've seen that time and time again as well. So having the regulators informed and engaged in the reform process is the ideal way to proceed, as they have the mandate to engage regularly with financial institutions and can play a key role in the communication and the bridging of the knowledge gap of the cost benefits of the policy reforms. So for example, the Bankers Association, non-bank associations, they all play a key role in bringing on board and adopting to this new legal framework. So just to recap, stakeholder engagement is critically important. Having representation from the private sector at the drafting table and early on in the discussions when policy formulation is happening is critically important. And engaging with not just the commercial banks, but the other financial sector market players is critically important as well. So Jay, maybe I'll just hand it back to you and leave it there for now, but happy to take any questions or elaborate further on some of those points.
Thank you. I guess you're also emphasizing the need for public-private collaborations in the reforms in order for it to be successful, which is easily said, but very difficult to be done. We have a number of government officials online who's actually listening to this. So I hope they can take this on board as they undertake further reforms. Next, we'll hear a more broader perspectives from a regional perspective, actually from Janet from OAS, before we delve into more legislative aspects. So Janet, you have the floor.
Yes, thank you very much, Jay, for that. Giving me the floor. And once again, good afternoon, good morning to everyone. The OAS Secretariat has been active in the field of secured transactions for several decades, with the development beginning with the development of the model Inter-American Law on Secured Transactions, which was adopted in 2002, followed then by accompanying model registry regulations adopted in 2009. As the Legal Secretariat, we have an ongoing mandate from the OAS General Assembly to promote domestic reforms among our 35 member states on the basis of these models and international standards, the UNCITRAL model law, for example. But this is not without its challenges. And I would like to share some of the lessons that we've learned within our region over the years. Much of what I'm going to say will mirror what Elaine McEachern has already said, but perhaps you will hear this from another perspective from the region, and perhaps these lessons that we share with others might be of assistance as well in the reforms that are ongoing now. One is that it can be difficult for some persons, especially those in positions to initiate legislative reforms, to understand how reforms of secured transactions laws can lead to improved access to credit. What is this connection? So to help explain that connection, one of the things that the Secretariat did was to make a video about the reform experience in one country, in El Salvador, in which this connection is explained in the voices of various beneficiaries of the reforms, in the hopes of encouraging other member states to initiate the reform process. This video, along with other information about our work, is available on our website, oas.org, and you can find it from there. A second lesson learned is that it can be difficult for some to appreciate the length of time that will be required, starting from the political commitment to the reform process through to that point in time where there will actually be a functional registry with widespread acceptance and use by a variety of stakeholders. We have organized a number of regional workshops in which government officials and registrars have been able to meet and share lessons learned. And a common theme that emerged during these sessions is the recognition that it will probably take more than one reform attempt. Because in many of our member state countries, the reforms represents significant change. A third lesson is that for many stakeholders, the reforms of secured lending requires not only a shift in legal culture, but also a shift in lending culture, in the engagement of the banking community, the private sector. Once again, this is really a paradigm shift that is required and requires a lot of capacity building on the ground. A fourth lesson is that secured transactions reforms may also trigger awareness of the need for reforms in related areas. An obvious one is insolvency. But less obviously is that reforms may also be necessary in relevant but slightly more distant topics. For example, while improved access to credit for medium and small businesses, known as MSMEs, is important in many of our member states, these MSMEs operate in the informal sector. And it's very difficult, if not impossible, for informal business to obtain formal credit. Thus, the reforms to simplify business registration and thereby encourage formalization is another important area of reforms that some states have realized they need to consider as well if access to credit is really going to be realized by those who need it most. Finally, and I've left the best for last because this really stresses again what Elaine McEachern has said, probably most importantly of all lessons learned is the need to engage all stakeholders, even those who may not be in favor of reforms, and to engage all stakeholders right from the beginning of the process. It is much easier to encourage stakeholders to embrace a new system that they themselves have helped to design and develop, rather than trying to do something very quickly, more quickly and efficiently, and then try to sell it later. Again, I refer to the proverb that I mentioned at the beginning: if you want to go fast, go alone. But if you want to go far and develop a system, a secure transactions regime that will be fully embraced, go together. We at the OAS Legal Secretariat wish everyone much success with this reform initiative and improving the getting credit environment in the Republic of Korea. Thank you once again for inviting our participation. I turn the floor back over to you, Jay. Thank you.
Thank you, Janet. I think you've made our job more difficult now, because not only do we have to consult different stakeholders, we also have to take into consideration reform in other business sectors, which is very important as well. I mean, even for UNCITRAL, we're looking at the perspectives from MSME perspective, which requires the secure transactions for access to credit, also their insolvency, their simplified registrations, which is also an area that UNCITRAL is trying to work on. Next, now we're going to the legal aspects. We have a professor from Seoul National University, Professor Young-Jun Kwon, who is going to give us an outline and a brief overview of the current legal framework for secure transactions in Korea. He was a member of the Korean delegations to Working Group 6, which prepared the model law on secure transactions. So it's nice to see you via virtually also, but still, I'd like to welcome Professor Kwon to the floor.
Thank you very much, Jay. Good afternoon and good morning to every participant. It is indeed my great pleasure and delight to be a part of this wonderful event. And I would also like to extend my deepest gratitude to organizers of this event, and in particular, Ministry of Justice, for allowing us to have this event and allowing me to participate as a presenter. So as Jay has mentioned, my mandate as a presenter today is to give you a very general overview on Korean secure transaction law regime. Well, given the limitation of my presentation time, I will proceed without further ado, and I will share my screen. So in terms of a legal system, Korea belongs to the civil tradition, and thus has a statutory system as opposed to common law system. Therefore, the generally recommended way of understanding legal issues in Korea is to review relevant Korean statutes and the provisions therein. With regard to secure transactions law, Korea does not have an omnibus statutory law which governs the issues arising from the secure transactions in an overarching manner. Rather, security rights in Korea is prescribed in different statutes. Among these statutes, the Korean Civil Code is the one that offers the basic doctrinal framework for security rights in general. The Korean Civil Code stipulates a pledge for movable and receivable, and a mortgage for immovable. Other security rights in specific objects are governed by special statutes, such as the Provisional Registry and Security Act, the Factory and Mining Assets Mortgage Act, and the Act on Mortgage on Motor Vehicles and other specific movables. However, a particularly significant statute is the Act on Security of Movable Property and Claims, which I will explain more in detail later on. And further, there is a security right device developed by courts in the form of case law, which is called 양도담보. It is a security by means of transfer. In practice, security in immovable assets has been preferred over security in movable assets or receivables for several good reasons. First, security rights in movable assets must be is higher in value, and because it is higher in value, creditors prefer this as their collateral. And also, there are different reasons for preferring immovables as collaterals. In the first place, we have established legal system. We have established registration system for collateralization of immovables. So if you look at the statistics in Korea, nearly 95% of the loans that were made by financial institutions in Korea were secured by immovables as opposed to movables or receivables. However, after financial crisis in 1997, and with the fluctuation of price in immovables, the demand of collateralization of movables and receivables has steadily increased. And this led to a special act, which I described early on. Of course, before legislating that act, secure transaction law was basically governed by civil law. It was governed in the form of pledge when it comes to movables and receivables. So there were pledge on movables and pledge on rights, and they were available means that were provided by Korean Civil Code. But in practice, security by means of transfer, which we call 양도담보, which is formed in the by case laws, it was also a very important means which was employed by finance institutions when they made loan to other enterprises. And then there came a security rights in movables and receivables, which I will call the Act later on in my presentation. And this Act was legislated in 2012, and it has been almost 10 years since the enactment of this new legislation. And this came to a legislation with the advent of modernization of law on the level of institutions that were international in its nature. For example, UNCITRAL's legislative guide was one of the great examples that Korea followed, and it influenced the legislation of this act. Well, let me briefly talk about a security by means of transfer, because I am quite certain that many of you are not familiar with this notion. So the demand for more flexible and customized security rights before the enactment of the act had increased. So in this context, 양도담보, the security by means of transfer, functioned as an alternative to the pledge of movables and the pledge of rights. As opposed to pledge, it is a non-possessory security right, and there's no direct statutory ground upon which this type of security right is acknowledged. Rather, it was founded based on case law. And the security rights by means of transfer may be created on almost any asset. There was no limitation, as long as the asset has collateral value and is assignable. And for this reason, immovable, movable, and other rights can all become the object of the security by means of transfer. Often, a set of movables or receivables as a single pool of collateral can also be collateralized under this type of security right. Encumbrance of inventory is a typical example. And since this is basically non-possessory, it is considered more effective than pledge. It is also created by virtue of contract. That means it is more flexible. However, because of its non-possessory nature and lack of registration system, it suffers from legal uncertainty and instability. So with this background, we now have this act, which has been 10 years old. The purpose of this act, however, is not to override existing types of security rights acknowledged by other statutes, including the Korean Civil Code, but its purpose is to create additional types or additional layer of security rights on top of those existing security rights. And this act, as I have mentioned previously, is regarded as a fruit of continuing legal reform efforts to modernize the legal regime governing security rights in Korea. The UCC and the UNCITRAL Legislative Guide on Secure Transaction had a certain impact on this reform. And this act introduced a registration system for security rights in movables and receivables. So this is the new feature of this act. And the act changed the whole landscape by allowing all types of movables and receivables to be registered. The act applies to security rights acquired pursuant to a security agreement. A security agreement here refers to any type of agreement that has substance of a security agreement, regardless of its form and title. So in this regard, I would say the act has employed a functional approach. And there are many provisions regarding the rights and obligations of the grantors and the secured creditors. I will not make detailed explanation on these provisions, but let me just say that there are a lot of provisions that give a detailed explanation on how this legal relationship is governed between the grantor and the creditor, as well as among the stakeholders, including a third party. And the act also does not hinder the secured creditor from transferring the security right to a third party. However, the act does limit the transferability of security rights by requiring the security rights to be transferred with a secured claim. Therefore, merely transferring the security rights without transferring the corresponding secured claim is not allowed under this act. The parties can and should register the creation, transfer, alteration, cancellation, or extension of a security right under this act in the collateral security registry in order for these to have legal effect. In this regard, the act contrasts with the UNCITRAL model law, which does not require registration for the creation or extinguishment of a security right. In Korea, it is required to create or to extinguish security right. In terms of enforcement, the Act recognizes two different methods of enforcement. One is to put up the movable property over which security rights have been created for sale at a public auction, and another is private enforcement. And there are actually two ways of private enforcement. One is to sell collateral, and another is to take over the ownership of collateral. In either way, the secured creditor should pay the surplus to the debtor, renter, or other right holders who are entitled to it. And I believe this is my final slide. The Act may be evaluated positively in that it took unitary approach and established electronic registration system, provided clear rules on priorities, and offered possibility for private enforcement. However, it also has some weaknesses. For example, limits in the scope of application with regard to a grantor and duration of the security right, and non-existence of collective encumbrance, such as comprehensive encumbrance of intellectual property and movables. And also it employs a right-based registration. So the Act has not been satisfactory in helping the small and medium enterprises that are generally not able to afford sufficient immovable property as collateral. I think there may be a myriad of reasons. For example, the non-familiarity among business entities with this new security rights regime, or the lack of valuation techniques, lack of data, a shortage of experts. So there are a lot of reasons that we can think of. I think we can modernize our legal regime, and that can alleviate this problem. But well, let me say that there is a very strong government-led guarantee system or governmental-led measures, administrative measures for the benefit of small and medium enterprises. And I think that is another feature that we should take into consideration when we think of security rights in Korea. So my conclusion is that apart from all those technical and administrative measures, we still have room for improvement. We should make additional legislative efforts to further reform to make a better security right regime. So for example, we can think about employing a notice-based registration as opposed to right-based registration. And I think this will minimize time and cost of registration. And I think we can pursue the reinforcement of the preservation and monitoring of the assets. And we can also consider employing advanced technologies in this regard. So future reform is likely to require patience. It will require some costs. But although there may be some short-term disarray and costs, the long-term benefit after such efforts will end up with an improved secure transactional regime. So I'm hopeful that the significance of moving toward more modern secure transaction law regime could be acknowledged by both executive and legislative branches of government, as well as relevant industry and stakeholders, so that we can actually move forward to that direction in the future. So this concludes my presentation. So floor is back to you, Jay. Thank you.
Thank you, Professor Kwon. You've given us a very good overview of the current legal framework for secure transactions in Korea, and especially the role of the new act. We also are trying to persuade the government to follow the UNCITRAL model law, which is going to be our next presentation. So, but I think what you mentioned as the future reforms are to be they need to be done in as a whole. It's not only one part need to be done, but it has to be done in a whole. And I think it's a good leadway to our next presentations, which is going to be on the UNCITRAL model law on secure transactions. Now, before I give the floor to my two colleagues, I see that there are a number of speakers and panelists on the Zoom panel. So if you have any questions, please raise your hand, or please write in the chat. I also see that in the list of participants, I see Professor Seok, who is also a distinguished speaker in this area. And I also see Megumi, who may actually be able to give us a perspective on the Japanese use of the Yangdo Danbo, which is called Jodo Danbo in Japanese. So if she is available, maybe we can also upgrade her as a speaker. But with that, I'd like to give the floor to my two colleagues, Thomas and Yang Ning, to give a brief presentations on the model law on secure transactions, which we have been trying to also kind of sell to the Korean government, that this should be the basis of reforms, which we have had some difficulties in. So first, Yang Ning, could you give us a brief introduction of the UNCITRAL model law on secure transactions?
Sure, Jay. With the purpose to assist states in developing a modern secure transactions law dealing with security rights in movable assets, the UNCITRAL model law on secure transactions is designed to increase the availability of credit at more affordable rates by providing an effective and efficient security transactions law. It is designed for implementation in states with different legal traditions. It is intended to be useful both to states that currently do not have efficient and effective security transactions law, and also to states that already have such laws but wish to modernize them and harmonize them with the laws of other states that have modern security transactions law, which are generally consistent with the model law. Thus, the model law is a tool for modernizing and harmonizing secure transactions laws and a prism through which they may be viewed.
Thank you, Yang Ning. UNCITRAL has prepared a number of other texts on secure transactions, and maybe Thomas, can you give us on how they interact?
Sure, thank you, Jay. Well, let me start with the history. The first text prepared by UNCITRAL 20 years ago in 2001 was the United Nations Convention on the Assignment of Receivable in International Trade. Subsequently, the Legislative Guide on Secure Transaction in 2007, the Supplement on Security Rights and Intellectual Property in 2010, and the Guide on the Implementation of the Security Right Registry in 2013 were prepared. All these instruments contain detailed commentary and recommendations on the issues that need to be addressed in a modern secure transaction law. The model law itself is a crystallization of such recommendations, making it easier for legislators to use the provisions therein in the domestic law. Needless to say that the model law is also based on the articles in the Receivables Convention. And lastly, I would also like to note that to support the actual parties to secure transactions, a practice guide was prepared in 2019.
Thank you, Thomas. Now, as Professor Kwon has mentioned, Korea has a law concerning security rights over movable assets, but not all of the assets are covered. There are different laws. There are also different types of security devices, as one was the Yangdo Danbo that Professor Kwon mentioned. Now, how does the model law address these kind of different assets and different types of security devices? Yang Ning?
Thanks, Jay. The model law suggests a functional and comprehensive approach to secure transactions. The functional approach, which the professor also just mentioned, is in the model law is reflected in the definition of security right in Article 2, subparagraph KK, which is showing on the screen, which means that the model law applies to all transactions under which a property right in a movable asset is created by agreement of parties to secure payment or other performance of an obligation, regardless of the form of transaction, the terms used by the parties to describe the transaction, or whether the assets are owned by the grantor or the secured creditor. Meaning that the model law applies not only to transactions in which the grantor grants a security right in an asset that it already owns, but also to transactions that take the form of the creditor retaining or being transferred title to an asset to secure performance of obligation. For example, retention of title arrangements and financial leases. This may be a major distinction from the traditional positions in Korea where such transactions may be treated differently and such rights immovables have been denominated differently.
Thank you. I think Professor Kwan did mention that Korea takes a functional approach with regard to the Act. But from our perspective, because of the different laws and how the different devices are treated, we may have a different view on whether the functional approach is apparent in the Korean law. Now, the next question that I have is to Thomas. Under the model law, is it possible to create a security right over all types of assets of a company with one agreement and one registration? Thomas?
Yes, absolutely, Jay. That is possible under the model law. Article 8 of the model law allows the creation of a security right over all of a grantor's assets. To simplify the creation of such security, the use of single document, all asset security agreements are recommended. I understand that there's a lot of interest in this type of all asset security rights around the world, including in Korea. It is important to note that the same rules concerning secure transactions apply to all asset security rights. However, the use of single document, all asset security agreement will not be possible if the creation of a security right over different type of assets are addressed by different laws. Different laws may impose different registration requirements, which makes it very difficult for third parties to search in registries. Daher, ideally, it should be made possible to register all asset security rights in one single registry, so that third parties do not need to visit multiple registries for this purpose. Thanks.
Thank you. We are aware that there was a bill proposed in the Korean National Assembly to create an all asset security right over different types of assets, which was kind of discarded because the National Assembly dissolved. So we're hoping to see that return so that it is possible for grantors to create a security right over all types of assets. I'm talking about this all types of assets because one of the approaches that the model law takes is a comprehensive approach so that it applies to all different types of assets. On this point, Yang Yin, can you elaborate on the comprehensive approach of the model law?
Of course, thanks, Jay. The comprehensive approach is reflected in Article 1, which provides that a single law should apply to security rights in all types of movable assets unless specifically excluded. The model law allows a person to grant a security right in A, almost any type of movable asset, including inventory, equipment, receivables, bank accounts, and intellectual property. B, an asset that it already owns, as well as an asset that may acquire in the future. And C, all of its movable assets, both present and future. This approach disapproves of overlapping and fragmented security transaction regimes. This approach also ensures that a single set of rules govern creation, third-party effectiveness, priority, and enforcement of a security right in all types of movable assets. This allows a security creditor to be certain of the ways it could obtain a security right, and furthermore, be certain of the rights that it will have upon default of the grantor. An integrated security transaction system would provide the greatest transparency and predictability because all rights in collateral, whether traditional security interests or their functional equivalents, are registered at the same registry, and the law will contemplate how priority rules apply across the different types of contracts.
Thank you, Yang Ying. When we talk about fragmentation, I believe in Korea, the sale of a claim or sale of a receivables is governed by the civil code, whereas the security over receivables is now covered by the act, the new act. Thomas, can you tell us how the model law treats the outright transfers and security rights over security rights over receivables?
Sure. The model law applies not only to security rights in receivables, but also to the sales of receivables, which is known as outright transfers of receivables in the model law. Under the model law, the transferor of a receivable is treated as the grantor, the transferee as a secured creditor, and the agreement between them as a security agreement. One reason why the model law applies to outright transfers of receivables is that it's often difficult to tell whether a person is transferring receivables outright or granting a security right in them. Applying the provisions of the model law to both types of transactions reduces the need to make this distinction. Another benefit of this is that it allows the provisions of the model law to determine priority among all competing rights in the same receivable, including the rights of an outright transferee.
Thank you. Yang-Ying, Professor Kwon mentioned that in order to create a security right in Korea, you have to register, or at least under the Act, you have to register in order to create a security right. Could you elaborate on the requirements that is provided for in the model law?
Yes, the model law makes it easy to create a security right. The parties only need to enter into a security agreement that satisfies simple requirements. And to create a security right in a movable asset, the grantor must have rights in the asset to be encumbered or the power to encumber it. The model law allows for the creation of a security right not only in assets that the grantor already has, but also in assets which do not yet exist or in which the grantor does not yet have rights at the time the security agreement is entered into, such as future assets. And to allow for this, the model law requires the assets in the security agreement be described in a manner that reasonably allows their identification, as it might not be possible to include a specific description of future assets, and such a requirement may pose a question whether the future asset is object of the security right.
Thank you. The next question actually can also go to our next speakers, Hamza and Marek, because when they speak. But I think the legal framework for secure transactions in the model law requires a registry systems in order to be fully functional. Thomas, what does the model law say about the registration? Because it's a very key point of reference, yes.
The model law provides for the establishment of a simple and transparent registration system. Such a public registry gives effect to the provisions of the model law relating to the registration of notices with respect to the security rights. Such registries allow a lender to take security rights in an asset without having to take physical possession of it, while the debtor retains title and possession. As a notice-based registry, parties do not need to attach security agreements and other documents to prove the creation of the security interests. The registry-related provisions are all collected in a set of rules called the model registry provisions, drafted to accommodate flexibility in registry design. The registry under the model law should ideally be fully electronic and accessible online for registering notice and for carrying out searches. Registry services are designed to be fast and inexpensive as possible under the model law, while also ensuring the security and searchability of the information in the registry record.
Thank you. Maybe Marek can elaborate further because we just discussed the registry for model law and factoring when he speaks. But yeah, there are other ways of actually achieving third-party effectiveness. I mean, one is registering a notice in the registry, which Professor Kwon has also mentioned that this could be a possible improvement. But Yang-Ying, could you tell us what the other means of achieving third-party effectiveness is under the model law?
Thanks, Jay. This question relates to the registration system Thomas just elaborated. A security right that is effective only against the grantor by concluding a security agreement has little practical value. A secured creditor will want to ensure that his secured right is also effective against third parties by publicizing its existence. And you just mentioned one of the primary methods for achieving third-party effectiveness through register a notice in the secure transaction registry. The secured creditor need not take possession of the encumbered asset in order to make the security right effective against the grantor and the third parties, meaning that the decision on which party has possession of the encumbered asset is largely just a business one. And the registrant under the model law is required to submit a simple notice containing only the basic information about the security right. While authorization of the grantor is required for the registration, the security agreement need not be submitted with the notice, which further facilitates advanced administration. And the records in the registry are indexed by reference to the name of the grantor and not by the asset. And the other methods for achieving third-party effectiveness of a security right, one of them is a physical possession of a tangible encumbered asset by the secured creditor, as we have seen in pawn shops under a pledge. And the model law also provides other methods, asset-specific rules for achieving third-party effectiveness for bank accounts, negotiable documents, and uncertified non-intermediated securities.
Thank you for pointing out the importance of registration as a third-party effectiveness point. But what does the model law provide in terms of priority conflicts that arises between different right holders? And what happens if the asset is sold to another party? And a supplementary question that I may be asking to Professor Kwon in this aspect is, who would have priority, whether somebody registers under the Act and somebody who has a 양도담보? So maybe I can return to you after we have done with the model law aspects, Professor Kwon. But on this point, can I ask Yang Ying to supplement?
Thank you, Jay. I will address your first two questions. I noticed you list a number of them. So registration is a basis for predictable, fair, and efficient ordering of priority among competing security rights in the same asset. The general priority rule of the model law is that priority is determined according to the order of registration. Ordering priority according to the time of registration, as opposed to the time of creation of a security right, promotes efficiency and fairness. By subjecting all security devices, as well as outright transfers of receivables to registration under the registry functions as a key reference for all financing purposes to determine whether there is an existing or potential security right over the assets of a borrower. This addresses concerns with regard to hidden encumbrances and security rights unknown to other secured creditors. The model law also provides clear and predictable priority rules that allow prospective creditors to determine the priority of their security rights from the very outset of the secure transaction. And on your second question, what happens if the asset is sold to another party? The model law addresses not only priority competitions between secured creditors, but also competitions arising from the sale or lease of the asset and the ground towards insolvency. As a general rule, even when the asset is sold, the security right continues on the asset unless it is a sale in the ordinary course of business. For example, even if a store has granted a security right on all of its products in stock, when you purchase from the store, the product you purchase would not need to be subject to the security right. The model law further suggests the need to clearly set forth in the law any preferential claim, for example, claims of employees for unpaid wages and of the state for unpaid taxes, that would have priority over a security right. It also sets forth rules to provide super priority to creditors that have extended credit to enable the grantor to acquire assets, referred to in the model law as an acquisition secured creditor. They would have priority over other secured creditors.
Thank you, Yang Ying. Yes, I'm aware that one of the areas that Korea did not score in the doing business report is with regard to preferential claims, which was a kind of unclear on the rules. But may I actually return to Professor Kwon on this point? And if I may ask him how he thinks whether a secured creditor who has registered under the Act, which is possible for a 양도담보권자, also a secured creditor, and if there is somebody who has not registered under the Act but has a 양도담보, who would have priority under that case? Because this is something, as we mentioned, a clear registration rule where you can know who registered first it's easy to determine the priority, but how he thinks on who would have priority over a 양도담보권자 and a secured creditor who has registered.
Well, thank you for your question, Jay. So the starting point, and as a matter of principle, the priority will be determined by the order of registration. So whoever registers first will take precedence. But the situation arises, as you have just mentioned in your question, that one secured creditor has registration, and whereas another secured creditor in the form of 양도담보 will not have registration, but still have some kind of right in rem. So in that circumstance, Korean Supreme Court is of the position that it should be determined in the order of the establishment of security rights. So for example, if there's registration, the establishment of security right would be the date of registration. And for another creditor who secured a collateral in the form of 양도담보, it would be the date of a secured 양도담보 agreement and the transfer of the collateral asset. So when those two requirements are met, the 양도담보, which is a virtually secured right, will be established. So you will be comparing those two dates, and whatever is earlier would take a precedence. Thank you.
Thank you. And I think that's actually the point that we would like to raise, that it actually, the 양도담보 is a hidden encumbrance where people from the public is not able to know whether there is a security right or not. So I think that is one thing that we need to address in the Korean law. Last point, question to Thomas. How does the model law address enforcement of security rights?
Sure, let me elaborate on that. When the borrower defaults, the secured creditor will rely on the effectiveness of its security right to get repaid. A security right makes it possible for the secured creditor to recover what is owed from the value of the encumbered asset. And the model law provides a number of ways to do this. First, the model law adopts the policy that maximizing flexibility is likely to increase the efficiency of the enforcement process. It provides that the exercise of one post-default right does not prevent the exercise of another post-default right, except to the extent that the exercise of one right makes the exercise of another right impossible. Under the model law, while a secured creditor can exercise its post-default rights by applying to the court, a secured creditor does not need to go to the court and can instead enforce the security right itself. This may mean a significant change in many jurisdictions. Although out-of-court enforcement can make it possible for a secured creditor to recover what is owed more quickly and efficiently, the model law imposes conditions to minimize the risk of misuse. Enforcement is subject to the general standard of conduct in Article 4, which provides that one must exercise its right and perform its obligation under the law in good faith and in a commercially reasonable manner. In this regard, the model law proffers a secured creditor with a number of ways to enforce its security right. A secured creditor can sell the encumbered asset, recover what is owed from the proceeds, lease or license the encumbered asset, and recover what is owed from the rent or from royalty payments, or acquire the encumbered assets in total or partial satisfaction of the amount due. A secured creditor choice of how to enforce will depend on various factors, including the type of asset and commercial circumstances, of course. I hope this answers your question, Jay.
Thank you. I think that's all the questions that I had for my colleagues at UNCITRAL, who's currently also waking up quite early in the morning. So thank you for that. Now I'd like to move on to our next speaker from Unidra on the standards that Unidra has prepared and what kind of advice he has to the Korean government. Hamza Hamid, you have the floor.
Thank you very much, Jay, and thank you to the Korean Ministry of Justice and all the people that are organizing this conference, in particular Deputy Minister Lee for their kind invitation to Unidra to come to this conference and make this presentation. I'm very happy to be here amongst very distinguished colleagues to talk about some of Unidra's instruments in the area of secure transactions law and in how they can help in improving the getting credit environment in the Republic of Korea. Jay, I must confess, I really enjoyed the format of UNCITRAL's presentation just now. And then so if anyone has any questions at any point in time during my remarks, please feel free to just jump in and ask, because I do think that creates a much more easy to understand environment. So as my Deputy Secretary General, Professor Anna Veneziano mentioned earlier, secure transactions law and developing secure transactions law reform is one of the key areas in which Unidra works in, and it is very much part of our mandate. And historically, Unidra has developed several instruments in the area of secure transactions law. On this slide, you can see most of them. On the left, we have this system of Cape Town Convention, which I'll talk about a little more later, which involves developing an international system of secure transactions law applicable to certain types of high-value, movable, and uniquely identifiable assets. The convention is complemented by different protocols for different industries. On the right, you can see that we have also historically developed a range of instruments in the area of leasing and factoring. These include the 1988 International Conventions on Financial Leasing and International Factoring, as well as the Model Law on Leasing from 2008, and the ongoing project, which I will also talk about in my presentation on the Model Law of Factoring. As noted by various other speakers, we're presently also working on a joint project with UNCITRAL on the development of a model law on warehouse receipt, and I will discuss this a little later as well. But not only do we have dedicated projects that look at secure transactions law issues and try to propose secure transactions law reform, Unidra also has various other projects as part of its present work program that have a secure transactions law element. These include a project developing best practices for effective enforcement, which will look at enforcement of security agreements and to a certain extent, and then also our project on digital assets and private law, which looks at security agreements and secure transactions in digital assets. So moving on to the first of the instruments that Unidra has that I'll talk about today. This is the Cape Town Convention system, and the Cape Town Convention is an international treaty that was developed and adopted in 2001, and it's designed to create a system of secure transactions and a system of asset-based financing for various different sectors, and its application is extended to different sectors by different protocols. Presently, there are 4 protocols of the Cape Town Convention, the first one being the aircraft protocol, which was adopted alongside the convention in 2001. This applies particularly to aircraft engines, airframes, helicopters. Then there is the Luxembourg Rail Protocol, which was adopted in 2007, which is applicable to all types of railway rolling stock, from speed trains to commuters, and to underground, to airport trolleys, things like that. Then there is the Space Protocol of the Cape Town Convention, which was adopted in 2012, which is relevant to the space sector and includes assets such as satellites, transponders, rovers, and assets based in outer space. And then there's the most recent Mining, Agriculture, and Construction Protocol of the Cape Town Convention, which I will touch on in my other slides, which was adopted very recently in 2019. The Cape Town Convention has a 2-tier structure whereby the head convention provides a common set of core rules, and then the protocols seek to adapt these rules to the needs of the particular industry that they apply to. This is very useful as many of these industries relate to different types of assets, and different types of assets often require specific rules for things such as repossession, actions in insolvency, and the Cape Town Convention's flexibility in terms of its 2-tier system really allow for that. The protocols can derogate from the convention and prevail over the convention in the case that there is a conflict between the two. The Cape Town Convention, as my Deputy Secretary General mentioned, is one of Unidra's most successful instruments. So much so that the Cape Town Convention presently has 83 contracting states from all parts of the world and has also been approved by the European Union. It is often regarded as one of the most successful commercial law treaties ever adopted, and its aircraft protocol now has over 80 contracting states, and a majority of aircraft financing transactions that take place in various parts of the world are now structured based on the basis of the aircraft protocol. So much so that the international registry that was set up under the aircraft protocol, in which interests in aircraft objects are registered, now has more than 1.2 million registrations in it. And these are over more than 250,000 aircraft objects. As you can see, we have wide-scale adoption in all parts of the world, including Asia, the Pacific, South America, North America, and a majority of aircraft financing volume now does flow through the aircraft protocol. And then we hope to achieve the same with the other protocols of the convention. The key features of the Cape Town Convention model, which apply to all protocols, is that the Cape Town Convention provides for the creation of an international interest over equipment, which can derive from a security agreement, a conditional sale, or a lease agreement. All types of equipment within the Cape Town Convention system are high value, uniquely identifiable, and movable. Each protocol of the convention provides for the creation of an international asset-based, wholly electronic registry that ensures transparency and predictability, as well as effectiveness against competing creditors in insolvency. There are clear priority rules determining priorities against subsequently registered interests, interest in domestic law, with a very limited number of well-defined exceptions. There is effective enforcement in insolvency. The Cape Town Convention provides effective and swift enforcement measures, including out-of-court remedies and speedy relief if contracting states so agree. And the Cape Town Convention system also allows for a degree of flexibility through declarations, whereby it allows states to make policy choices through declarations to ensure that the convention and the protocols in their implementation domestically align with the domestic systems that they have in place. It also has enhanced creditor protection through protocols, and different protocols of the convention take different steps to allow states to offer additional creditors, additional certainty over assets covered. This slide describes the system of priority under the Cape Town Convention in a very simplistic manner. As you can see, an asset which is within the scope of a particular protocol of the Cape Town Convention, creditors can register a security, an international interest over them, which can take the form of either a security agreement, a title reservation agreement, or a leasing agreement. Once this international interest is registered in the international registry created under the particular protocol, this registration will take priority over any subsequently registered interest in that asset, as well as over any unregistered international interest and domestic law interests in that asset. It's important to recognize that the applicability or priority of interests registered in the registry is dependent on the state where the debtor is, and as long as the debtor is in a contracting state of the Cape Town Convention, the priority can be enforced, and the Cape Town Convention and its protocols, the relevant protocols, apply. It's also important to note that in various circumstances, even constructive knowledge of a prior interest under domestic law is not relevant as long as there is an international interest that has been registered properly in the international registry. Moving on to the most recent edition of the Cape Town Convention system, which is the Mining, Agriculture, and Construction Protocol. As I noted, this was adopted very recently in 2019 at a diplomatic conference in Pretoria, which was attended by over 150 delegates from 43 states, various other organizations, and observers. This extends the application of the Cape Town Convention to the mining, agriculture, and construction sectors, and contains several specific provisions for these industries. What it mostly does is that it creates risk reduction for creditors when providing credit to industry participants and operators in these industries. When a piece of financing is granted over any asset, a lender thinks of a number of factors. In particular, the three most relevant factors often are the amount of the loan, the degree of certainty over loan repayments, and the value of the collateral which can be recovered net any costs of recovery. The Cape Town Convention and all of its protocols, but the MAG protocol in particular, greatly enhance the value of the collateral which can be recovered net any costs of recovery by creating a clear and easy to exercise mechanism for the enforcement of the creditor's security rights in the case of an insolvency, thereby allowing the creditor to realize the asset value and redeploying it wherever there is demand. According to an independent economic assessment that was conducted for the MAC protocol prior to its adoption, it was shown that it can have immense economic benefits for countries all around the world, including $23 billion worth of impact on GDP in developing countries, $7 billion in developed countries for a total of $30 billion every year. It is also estimated that the MAC protocol can increase the stock of MAC equipment by over 90 billion over a 10-year period. And this economic assessment was very limited because it only covered Unidroit's 63 member states. As I noted, the Cape Town Convention has already been adopted by more states than that consist of Unidroit's membership. And so once the MAC protocol starts to achieve the same levels of success, it is anticipated that these numbers will be much smaller than what the actual economic benefits might be. In particular, for Korea, I ran some numbers and dug into the UN's statistics department to see the amount of equipment that is covered under the scope of the MAC protocol that was being imported and exported from Korea. The numbers you see on the screen are 2018 numbers, if I remember correctly, and showcase that in that year, Korea exported more than $4.1 billion worth of equipment that falls under the scope of the MAC protocol, as well as importing more than 1.2 billion. In particular, a specific category of equipment, which is self-propelled bulldozers, angle dozers, and other machinery of that sort, which is used in mining, agriculture, and construction, was exported for an amount of more than $2.7 billion in that one particular year. And if Korea was to consider the signing and the implementation of the MAC protocol, and if the MAC protocol starts to get adopted in different parts of the world, then the exporters in Korea for these types of equipment will have access to greater markets to export their equipment, and then will be able to export their equipment through financing arrangements that will be available at lower transactional costs due to the greater certainty offered by the MAC protocol. Additionally, particularly with regard to the imports that the Republic of Korea has of MAC equipment, importers and operators of MAC equipment, such as farmers, miners, construction workers, will be able to import more modern machines at cheaper financing rates because of the added certainty created by the MAC protocol with regard to the confidence that it generates for creditors invested in these sectors. Currently, the MAC protocol already has 5 signatory states, 4 of which signed at the diplomatic conference. And then in October of last year, the United States of America became the 5th party to the Cape Town Convention's MAC protocol. And then we encourage states from all around the world to engage with us further on this, and we'd be very happy to assist them in their consideration of the Cape Town Convention itself, and also any of its protocols which they think might be beneficial for their domestic economies. Moving on to the 2 other instruments that I'll very briefly talk about before opening up to questions. As has already been noted, Unidra is currently developing a model law on factoring. On the right, you can see what a factoring transaction generally entails. I don't think I need to dig into the details of that to this audience, but factoring plays a very important role in financing all across the globe. Factoring in the form of the financing of receivables has a global volume of more than 2.9 trillion euros. In Korea in particular, in 2017, this volume was over 13 million euros. And despite the growing importance of factoring, no intergovernmental organization had adopted a factoring model law to assist states in undertaking reforms to improving their domestic legal frameworks. And very often, the set of rules that applied to domestic factoring industries were very different from one state to the other, which created large amounts of uncertainty and difficulties for financial institutions insofar as understanding the types of legal rules that would apply to the transactions that they were partaking in. As such, the model law will provide an instrument for states that want to introduce a new factoring law or update their existing laws. And this instrument will be based quite significantly, and it will be completely complementary and in line with UNCITRAL's model law on secure transactions, which was discussed at length earlier. And we really think that the implementation of the model law on factoring, once it's developed, will help countries really boost their domestic factoring industries and create a lot more business in that area.
Hamza, we'll have to close quite soon. So if you can close your remarks, I would like to give the floor to Marek, who's been waiting for a very long time.
Absolutely. So I'll just conclude by mentioning that we're also working on a model law on warehouse receipts in coordination with UNCITRAL. This will incorporate new technologies and stimulate and look at the use of warehouse receipts as financial instruments, and will be a great tool for governments trying to implement a functional and coherent system of warehouse receipts financing within their national legislations. All the information on all of these instruments is available on the Unidra website, and I'm available for questions, and then would be happy to discuss any of this with any participants at any point in time. So thank you very much, Jay, and thank you for taking, and sorry for taking so long.
Nope, it's actually the moderator's fault. I was wrong in keeping the time. I also was looking at the wrong camera. I was looking at the camera in the front, and I'm supposed to be looking here. So I'm actually happy to give the floor to the last the speaker on today is Marek, who is a very good summarizer. He will summarize our discussions today. But actually a question to you, what can the National Law Center contribute to the reform of secure transactions in Korea?
Thank you very much, Jay. And in addition to the summary, I have this presentation which concerns primarily the rules on receivables finance. So it builds on what Hamza was describing with respect to the Cape Town Convention, which is focused on a particular type of asset and transactions. And I will be describing another type of legislation that focuses on receivables. And during the course of the presentation, also touch on some of the aspects that have been mentioned earlier, including some of the questions that you posed. Next slide, please. So this is a summary of the relevant instruments that Korea may wish to consult when revising its rules, whether adopting a comprehensive secure transactions law or looking specifically at rules that facilitate receivables financing. Many of these have been already mentioned, such as the UNCITRAL law on secure transactions. Perhaps few of you are familiar with the Unidra Convention on International Factoring of 1988 that has been superseded by the 2001 Receivables Convention, again adopted by the United Nations. In addition to these instruments and international standards, there are also practice rules, such as published by the International Chamber of Commerce or FCI, which is the largest factoring association in the world, that may be helpful to the industry itself, as they provide some practical tools or sets of contractual provisions that may help factoring companies to engage in these kinds of transactions. And my last row on this slide basically summarizes what the Korean framework today looks like, which is largely based on Professor Kwon's book chapter that I enjoyed reading. So basically all I know about Korean law is I learned from Professor Kwon. Next slide. What I have encountered myself in reforming secure transactions or receivable financing laws in civil law jurisdictions is, first of all, the notion of receivable. Civil codes do not generally define what a receivable is, but they generally define a claim. And a claim may be defined as a right to performance or right to payment. And as we know, there are different kinds of right to payment, which could be receivables, could be letters of credit, for instance, or bank guarantees, could be bank accounts, securities such as bonds, or negotiable instruments. All of these payment rights are governed by discrete sets of rules. So in your framework, you would have specific rules on letters of credit, specific rules on negotiable instruments. So depending on how the payment right is evidenced, how it arises, different sets of rules may be applicable. So at the outset, it's very important to clarify what kind of a payment right this new framework will deal with. If you're adopting a comprehensive secure transactions law, then as Janning and Thomas explained, the UNCITRAL model law on secure transactions would give you the framework for all these kinds of payment rights for which it provides asset-specific rules. If you are reforming only your receivables finance framework, you need to pay a close attention to how you define a receivable. Next slide, please. After you have identified the asset, the receivable itself, you need to think about the types of transfers that your legislation should cover. And as Professor Kwon explained, there are at least 3 different types of security devices or devices that may be used to finance receivables. It would be the civil code pledge, then or civil code absolute assignment, then there would be a pledge under security law, and then Joto Tampo. Ideally, all of these types of transfers should be covered by a single set of rules, which would then enable the use of registration and a single set of priority rules, so that you don't encounter the kinds of situation that Professor Kwon was describing with Supreme Court decision, where one transfer when the receivable was transferred to one creditor under one type of a transfer, and then later on to another creditor under a different kind of a transfer for which there is no priority rule in the code itself, as a result of which there was legal uncertainty until the Supreme Court ruled on that situation, which could have been easily avoided if the Korean legal framework addressed all these transfers in a singular manner and provided for registration. These laws on receivables finance also deal with other types of transfers, such as enabling a security right in a pool of receivables. So, for instance, instead of taking the whole package of receivables, the factoring company may finance only 50% of those receivables or take a partial interest in those receivables. And then final type of transfer that is also often covered by this type of legislation is a transfer for the purpose of collection, which is important in cross-border transactions where export and import factors transfer receivables between each other for the purpose of collecting the payment. Next slide, please. So this is just a summary of the receivables finance products. As you can see on the left side, we have invoice discounting, forfeiting, factoring, reverse factoring, that largely depend on absolute or rely on absolute assignments. So it's a one type of a transfer that underpins these kinds of receivables finance products. On the right side, it would be typically a pledge or its equivalent that is used to finance receivables, such as in a package of assets with inventory. These receivables finance products are described in detail in the International Chamber of Commerce document on supply chain financing that you can consult and learn about these different kinds of receivables finance products. Next. On the final two slides, I'll just briefly explain how legislation, future legislation, hopefully in Korea, should deal with these different kinds of transfers of receivables. So ideally, the legislation should apply to all three types of transfers of receivables that you currently have, whether they are security transfers or outright transfers, which would then enable the use of a notice registration system, which would enable creditors and factoring companies to easily describe the receivables without having to submit a security or factoring agreement to the registry. So a simple notice would describe the collateral as all receivables or all receivables owed to ABC. That registration would then also make the transfer effective against third parties, which we also call perfection. So there would not be a need, for instance, to notify each individual account debtor for the purposes of perfecting your rights. The registration would also then clearly and transparently and objectively determine the priority for the particular type of transfer, and would provide extended protection with respect to proceeds, which typically are collections of the receivables deposited in a bank account. Next slide. There are some differences between the types of transfers that you may wish to keep in mind when revising your legislation. Going back to Yanning's and Thomas's presentation, they explain how the enforcement rules under the UNCITRAL model law operate. And there is one difference with respect to the application of those rules to the different types of transfers of receivables, which is that an outright transferee or one who takes by absolute assignment is not subject to those enforcement rules, as that person is treated as the owner of the receivable. So it may collect at any time after the receivable becomes payable and doesn't need to return any surplus from the collection of the receivable to the transferor. And the other major difference is in insolvency, as Elaine was explaining in her remarks. It's very important to coordinate these various aspects of legislation, commercial law framework, and particularly insolvency, where an outright transferee of the receivable, again, should be treated as the owner of that receivable. In other words, when the transferor files for some kind of bankruptcy or insolvency proceedings, that should not impede the ability of the outright transferee to collect those receivables, while in contrast, if the receivable has been pledged, then the pledgee would naturally need to deal with the insolvency trustee, and its collection efforts may be stayed. So this completes my presentation, and going back to Jay's question, what is it that we can offer? Well, we're here to offer some assistance collectively as this network, as Elaine has a lot to offer from her institutional position. Hamza, as well as Anna, have a lot to offer from the perspective of Unidra and the model law on factoring, which we have a meeting that starts in about 10 minutes. And obviously UNCITRAL. So this is a collective effort that we're here to assist with. And from my own institutional perspective, I have a lot of experience working in both civil law and common law systems on secure transactions laws, as well as factoring or receivable finance laws. So the kinds of experiences that Jeanette and Elaine were explaining, I have similar kinds of experiences working on these kinds of reforms that you can further learn from both bad and good experiences. So with this, Jay, back to you. Thank you very much for your attention.
Thank you, Marek. We've gone a little bit over time, 20 minutes is a bit much, and it is actually the moderator's fault always. So I'm really sorry about this, but I would like to actually thank all the speakers who woke up very early in the morning, very late at night. And we know that we have a model law and factoring working group starting in 10 minutes, and I need to let you go. But I do have the closing remarks that I need to read out from the organizers. So this concludes the 2021 International Conference on Ease of Doing Business. On behalf of the organizer, the Korean Ministry of Justice, I would like to thank all of our distinguished guests for taking the time out on your busy schedules to attend this conference and sharing your deep expertise and insights, which we believe would bring great momentum for further developments in doing business in Asia and beyond. So we look forward to meeting you next year again, and thank you once again and goodbye. So with that, I'd like to close the session. And it was we were a bit late on time, but still it was nice to see you online. Thank you, everybody.
Thank you. Bye-bye.
Thanks, Jay. Bye-bye now.
Bye-bye.
Thanks, everyone. Bye.